Hey guys, welcome to The Market is Open. Check out our website, themarketisopen.com. Famed Tesla short seller analyst Gordon Johnson is back with more criticisms of Tesla and Elon Musk. He's been highly critical of the company, of Tesla's seemingly lack of demand, ever upcoming competition, of promises that Elon Musk has made, and he's been negative all the way up on Tesla. When the stock was in the $200 to $300 range, Gordon was pounding the table, throwing red flags in all directions, saying that Tesla was basically worthless. Now, as a bigger Tesla bear than ever, he's increased his price target, that's right, increased his price target on Tesla by an astounding 24% from his $70 April price target, and now has an $87 per share price tag on the company. Meanwhile, Tesla stock has trounced even the most bullish of expectations, rising to $2,000 per share. Right now it's over $2,200 per share, leaving Gordon Johnson in the dust. Johnson was even ousted from his previous job at Vertical Group and then started his own firm GLJ representing his initials. So in this video, we'll be looking at what new bear thesis he could possibly have in order to subtract enough value from Tesla to reach an $87 price target. But before we begin, please hit the bell button to subscribe and be notified of upcoming Tesla videos, and smash the like button to help support this video. We'd super appreciate that. You can also support the channel at patreon.com/themarketisopen, where we give a shout out to our patrons at the end of each video. And also, stop using Yahoo and Google Finance. Use our website, themarketisopen.com, where we have instant stock quotes. You can build your own portfolios. And if you type in a ticker symbol and you click on the $ right here for any stock, you'll see the raw financial data as reported by the company going back 9 years, not the generic accounts that other websites use, which don't tell you the full story of what the company is actually reporting. So Tesla bear Gordon Johnson was interviewed by Brian Sozzi, who in the past actually has been a bit of a bear himself when he was reporting Tesla news a few years ago when he was at The Street. I'm not sure if something happened there, but now he's the editor-at-large at Yahoo Finance, and I think since starting this new position, I haven't seen any bearish comments from him about Tesla. So it seems like he's made a turnaround there, and you'll see even in this interview, he's shocked about some of the things that Gordon Johnson has to say. So Johnson starts off by saying that Tesla is detached from reality and it's a busted growth story. Volkswagen is selling 10 million cars a year and Tesla is only aiming for 500,000 cars this year. Of course, we've heard this all before. He says that US sales have peaked, margins have peaked. They only sold 11,000 cars in China, even though they built 12,000 cars, so they're building inventory, and that the stock price is the main thing driving analyst opinions. So I do agree with the last point. I can see even with Tesla's bullish analysts that when Tesla surpasses their price target, they seem to just increase their price target. And I think he's alluding to Dan Ives from the firm Wedbush, who's increased his price target by like $2,000 this year, multiple times throughout the year. And every time they make a new yearly target, Tesla hits it within weeks. But I think part of that may be that analyst price targets have been, and for the majority of them continue to be, detached from reality on the low end. They need to catch up to what's happening in the marketplace with Tesla. But overall, I think Gordon's own research has fooled him or misled him, and he's dug in his heels and is obsessed with saying that Tesla is headed lower. Volkswagen sells a lot of ICE cars, but their electric division is getting crushed by Tesla. Tesla has dominant market share in all the geographies that it plays in, and their roadmap for bringing gigafactories online means that this is only going to get worse for competitors. Of all the major OEMs, Volkswagen does have an electric offering throughout many of their brands, Audi, Porsche, and the Volkswagen brand, but they're simply not compelling vehicles. VW is behind on batteries, not only technology, but the scale, and they've even said in the past that over 90% of their software in their own vehicles isn't even written by them. So contrast that to Tesla, which probably writes 99% of their software since they're so vertically integrated. And I've been saying, along with a couple others, that I think software will play a major role in the future, especially when hardware specs start to creep up to Tesla. But at this stage, that's not the case. The hardware plus the software advantage that Tesla has is putting them perpetually years ahead of other players. So Gordon's major mistake, because he's only done a quantitative analysis and forgot about the qualitative, is that he's only looking at the current numbers, which do show that Tesla sells fewer cars. But looking ahead a couple years, Tesla's roadmap could allow them to get to where Volkswagen is today in terms of number of units, whereas Volkswagen's future roadmap might get them to where Tesla is today in terms of units. The other trap that Gordon falls into is focusing too much on nitty-gritty details of certain numbers. He mentions that 11,000 cars were sold in China last month, which was down from the month earlier, and then they built more cars than they sold, racking up 1,000 cars worth of inventory. So this is missing the forest for the trees in my opinion. Tesla is working at light speed in China to ramp up their Gigafactory, which basically just started producing cars this year and is already in the tens of thousands per month. And so the growth trajectory in China, the world's largest auto market, is expanding like crazy. If anything, anyone who tries to copy Tesla will have to go through the same pains that they did in order to get to where they are today. Next, Brian Sozzi, I think, destroys him here, saying that he was a sell-side analyst for over 10 years, and if Tesla stock is at $2,000, how can you possibly keep an $87 price target on the stock? And so Gordon replies by saying this is actually quite simple. So in my opinion, I think this completely removes any shred of credibility that Johnson has left. I mean, let me know in the comments what you think about this. Like, is somebody paying Gordon Johnson to come online and say this kind of stuff about Tesla because they need the shares to be lower? My made-up theory is that it might actually be Elon Musk, because what Gordon is saying is so preposterous that if you were bearish going into this interview and listening to what he has to say, you would think that it's so ridiculous. How can you be this bearish on a stock and completely miss the big picture? So I think Gordon is actually converting bears into bulls. So Brian Sozzi also follows up by asking, why is Gordon looking for a loss in Tesla earnings, where the street has now increased its price target to $8.70 per share? So Sozzi, who, remember, a couple years ago also used to be bearish on Tesla, is now wondering why Gordon Johnson is looking for a full-on meltdown of Tesla stock in the back half of the year. So I really like that interviewing here. In the back half of this year, I think Gordon may be surprised once again that Tesla has actually been held back for the first 2 quarters of this year by the pandemic, but now Tesla will demonstrate the full power of their their factory, and get back to operating on all cylinders, even during this all-out ramp-up, building 3 gigafactories at once, and they're also upgrading the 4th one. Now, Gordon fires back by saying that Tesla is recognizing revenue on cars that haven't even been sold. So this is completely untrue. Tesla is following the accounting rules properly, and you can only recognize revenue once the vehicle is delivered and all paperwork is correct. Perhaps he's talking about the full self-driving revenue, and so Tesla only recognizes this revenue after they put out a milestone feature, getting them closer to completing full self-driving. But along the way, they're still putting out useful features that have value to customers. For example, although the vehicle can't completely drive itself without looking yet, summoning your car from your garage or from in between 2 closely parked cars, or while it's raining, does have a benefit and value. And so Tesla is able to monetize this and can recognize the revenue on this offering. But at the same time, Gordon Johnson is complaining that all of Tesla's profit came from taxpayer credits that will drop to $0 next year. So for somebody who claims to be delving deep into Tesla's accounting and financials, he should know that these are not taxpayer credits, but it's money from other OEMs. It's actually regulatory credits. So we know that Tesla is expected to get over $2 billion just from Fiat Chrysler alone, because they need to offset their emission-producing cars with these credits. And so that money isn't going to disappear in the short term. In the next few years it might. It is going to probably drop in the back half of this year. But it is free money for Tesla right now, which is helping them destroy the competition that's currently paying them.
Here's the reality on the battery. They have a battery day 922. Tesla buys its batteries from Panasonic, LG, and CATL. Let's go to Panasonic. Panasonic makes cylindrical batteries for Tesla. Anybody can buy those batteries, but nobody's buying them. If you look at CATL said they're going to have a 1,000,000-mile battery. This was something that was rumored that Tesla was going to come out with on Battery Day. Anybody can buy CATL's battery. And LG Chem just announced they partnered with GM to develop new batteries. And then if you look at what Toyota is doing, they're focusing on solid state, which is the next generation. There is no secret sauce. Tesla does not make its own batteries. That has been a wide misconception for a while.
So no one's buying Panasonic batteries? Well, Toyota has a partnership with them. Gordon left that out, but Tesla is buying batteries in the US and they need way more. So I don't see Gordon's point here. On Tesla's battery day, it's possible that they announced that they're going to be making their own batteries too. But the battery cells are just part of the equation. He is right. Anybody can buy Panasonic batteries or any of these batteries, but Tesla makes their own battery pack, the electronics, the powertrain, and they optimize like crazy to make it super efficient, such that if you just bought Panasonic batteries, you wouldn't suddenly have an efficient car. You would have nothing, because you need all the parts to work together.
And if you look at their technology, the FSD, full self-drive technology, Navigant ranks Tesla dead last. Tesla uses radar. The technology that everybody else uses is LiDAR. And we don't think it's a chip issue, right? Elon Musk keeps coming out 2.0, 2.5, 3.0, 4.0. He keeps pushing out.
Navigant ranks Tesla dead last. So check out our video about Tesla's autonomous driving tech. We discuss why Navigant is just a made-up research report for short sellers to talk about, because their charts actually make no sense. Tesla is one of the only systems that currently makes money and actually has a business model, whereas competitors like Waymo are in a race to see how much money they can lose the fastest by paying people to drive around in $400,000 LiDAR-enabled cars.
Listen, if Tesla is the technology leader, why has their R&D spend as a percent of revenue dropped from roughly 12% in 2017 to 5% thus far this year, the lowest amount ever in the history of the company?
Gordon is also adamant that something is wrong with Tesla because R&D spend as a percentage of revenue has dropped from 12% to 5%. This is probably the dumbest thing I've ever heard. You can always find these weird metrics that look terrible but mean absolutely nothing. Who cares about R&D as a percentage of revenue? Tesla's R&D has stayed about the same for the last 4 years, whereas revenue has more than doubled over that time period. So there you go. Maybe Tesla isn't overspending like other tech companies, who as they grow their revenue need to bring up R&D and marketing by just as much to maintain that level of growth. If anything, Tesla and Elon Musk should be commended as to how disciplined and effective they are and how incredibly scalable their business actually is.
I mean, they're selling cars. They've had 4 quarters of earnings. How long are you willing to sit tight here?
Right, but I just want to stress, you can't say they had four full quarters of earnings without understanding where those earnings came from. Those earnings.
But it doesn't matter. They still had earnings.
Those sale of credits, they say, are one time in nature. So if you have to look at what they're doing and what they actually do. They make cars and the profitability on them making cars. Their auto gross margins peaked in the third quarter.
But why should they be penalized? That is still part of their business. Isn't that something you do plug into your model?
No, that's one time. So they're saying listen, the only reason they're selling credit sales is because companies weren't selling EVs.
So I know we mentioned the credits already, and so my take on this is that these are one-time credits which continue to occur for the next couple of years. So it's not exactly one time, but more importantly is that I don't really care about these credits. I think that focusing on them is short-term thinking because Tesla is near their break-even point right now, and I see a huge wave of new cars and new products coming from Tesla's new gigafactories, such that each additional car that they sell will be incremental revenue and incremental profit. If the consensus estimate is $15 per share, that's not coming from credits. That will come from actual product sales. So I think that the credits count. It's free money right now. It won't last forever, but it doesn't need to. Gordon Johnson then speaks about Tesla's declining market share and how the competition is coming. He says Tesla has outdated technology and investors don't understand what they own. So I've heard this argument time and time again, but I think even other car makers admit that not only are they behind in many aspects, but there's certain things that Tesla can do that they simply cannot do. For example, Tesla has their A team working on things like the octavalve and their PCB heat pump, and they're refining software every day based on customer requests and pain points. The other automakers are still trying to focus on making their cars electric. They're not even thinking about new technology and other aspects of their vehicles, and they certainly don't have any software expertise. So Gordon has no basis of saying any of this, but people may perceive it as legit when he's yelling at the screen. So overall, the action in Tesla is the current reality. People are seeing that it is the future, and because Tesla was so heavily shorted, that's likely contributing to an excess amount of covering and buying the stock. I think Gordon Johnson is stuck in his own reality with an $87 Tesla stock price and doesn't realize how he actually has no credibility at all with his current stance. But let me know in the comments what you think about any of the points I highlighted, if you think he's right about anything. Perhaps Gordon Johnson is so forward thinking that his $87 price target is taking into account Tesla splitting their shares 100 more times. Alright guys, I hope you enjoyed this video. Please hit the bell button to subscribe and be notified of upcoming Tesla videos. And don't forget to smash the like button, we'd super appreciate that. You can also support the channel further at Patreon at patreon.com/themarketisopen. And we give a shout out to our patrons at the end of each video. Thanks so much for watching.